Welcome back. You're still tuned into Midcap Radar, and we have a lot of earnings to really tackle. So let's talk about Mindspace Business Parks REIT now. Q3 was quite a decent quarter for the company, saw pretty good revenue growth and operating income. Their rent, if you look at it on a year-over-year basis, has also increased by around 5.4%. We have the management joining us. Mr. Ramesh Nair is CEO of Mindspace Business Parks. Mr. Nair, thanks a lot for joining us. This is Pavitra. I just want to begin by understanding what your occupancy rates were like across Q3 and where does it stand right now?
Thanks, Pavitra, for having me on your show. We just declared our third quarter results. Our NOI grew 10.4%. Our revenues grew 13.5%. Coming to your question, our occupancy today is at 86%. Which means our vacancy is at 14%. But one thing which needs to be noted about this 14% vacancy is that 83% of this vacant space is in special economic zones. And out of this 83%, 86 of this can be flow-wise denotified. This is a new rule change which came into effect last month. This is a significant policy reform which will be a game changer for all SEZ developers. Two, three other things to be noted. Our LTV is at 21%. Our in-place rent, which is today at 68, but in the last quarter, the leases we did was at 78%. That's 14% more than our in-place rent. And we have a lot of assets which are coming in the pipeline over the next 3 years.
Okay, all right. So you do have a lot of assets in the pipeline. Mr. Nair, I wanted to understand about the SEZ denotification or the notification that came denotifying the floors in the SEZ space. How much of it do you think will get occupied in this calendar year itself? And does it mean higher rentals in SEZ as well? Because this is something that the industry was waiting for a long time.
So there is nearly 37 million square feet of SEZ space which has been lying vacant for a while. So previously, a few years back, demand for SEZs used to be like 50% of the overall demand. That 50% dropped to around 10% of the overall demand. So 90% of the demand was for non-SEZ spaces. So we thank the government for this long-anticipated SEZ reform. It's a big boost for the commercial real estate industry. This is definitely going to bring in more tenants into SEZ spaces and also boost economic activity within the SEZ spaces. But one thing you need to, again, I'm repeating it, is out of all the space which is lying vacant today, for us, 83% of it was SEZ. And this new rule change is going to help us unlock these spaces.
So how much of that do you expect to be unlocked in calendar year 2024 itself? That's what I wanted to understand, to give us a sense of how much will vacancies reduce by in the coming quarters.
In the next 4 quarters, I'm talking about financial year 25, we hope to bring these vacancies down by around 35 to 40%.
Okay, that's good to hear. The vacancies can come down by around 35 to 40%. Let me just go back to the rents, which I was mentioning have seen around a 5% rise on a year-over-year basis. Just tell us, where do you see this going? Because there isn't much fresh supply coming through. So do you think that rents are set to increase at a steady pace from here on? And how much of an increase would you pencil in?
So if you look at SEZ spaces, I don't see the rents going up significantly because like I said, there are close to 37 million square feet of SEZ spaces lying vacant with all the developers. So that's going to hit the market. But non-SEZ spaces, we believe rentals would go by around 4 to 6% per year.
Okay, 4 to 6% would be the non-SEZ pipeline. What is the pipeline for Mindspace Business Parks REIT, Mr. Nair? Will you look at expanding it via organic pipeline way, or will it be inorganic? You would be looking at some smaller assets?
So looking at both organic and inorganic. Organic, we are building 4.4 million square feet, mostly in Hyderabad and Pune. We have a new building coming up in Pune, what we call it the R2 building. That's going to add around 95 crores of revenues. In 26, we have a building called the B1 in Hyderabad. That's going to add around 125 crores of revenue for us. In 27, we have a building named B8. That's going to add around 150 crores of top line revenues for us. There's a data center which should be ready in the next 1.5 years. That's going to give us a total annual rental of around 30 crores. And in Airoli East in Navi Mumbai, we also have a hotel cum office building which is under construction. That's going to give us around a 60 crore revenue. So these are all the assets which is under construction now and would be delivered in from 9 months to a 3-year timeline.
Okay, sounds like a solid pipeline. Can you just tell us what is the kind of cost that you will have to incur for all of these projects that you mentioned? Just total.
The capex we are looking at spending over the next 3 years is 3,000 crore. This year, the coming year, FY25, we are looking at around 1,100 crores of capex.
Okay, all right. I wanted to wrap up with an industry question because interest rates are going to change. We are expecting a cut now in calendar year 2024, or at least they'll stay steady. What does it mean in terms of returns and somebody who's investing in REITs? What does it mean for generally your weighted average cost of capital as well?
So this is overall a new product, just about 5 years. Today we have just 200,000 people who invest in REITs in India compared to the 3.5 million Indians who invest in the stock markets and mutual funds. One thing to be noted here is if you look at the real estate universe in countries like US, the 60% of the market value of the real estate market value comes from REITs. In India, it's just around 17%. We truly believe that REIT as a product offers transparency, high levels of disclosure, tax efficiency. There is dividend and growth at the same time, diversification benefits, low risk. It's a very, very well regulated industry. SEBI has done a fantastic job today. If you want to put it in a REIT, 80% of a REIT should be completed assets. LTVs today, very strict about that. Less than 49% should be your LTV. 90% of your net distributable cash flows to be distributed as unit holders. So SEBI has put a lot of checks and balances for the sector. And we believe this number of 200,000 growing multifold.
Okay, all right, Mr. Nair, it was a pleasure speaking with you. Thank you so much for joining us and looking forward to more conversations because this is an asset class, as you said, is not seeing a lot of interest, but with more understanding, it would be the case. We'll do one thing, we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.